Joining us right now with more on the summer demand for the airlines is Helane Becker, senior research analyst in the aviation sector at Cowen and Company. And Helane, you put out a note recently that said more of the same. Is that a good thing just in terms of demand and what the airlines will be able to turn in terms of profits?
I think so. We think that second and third quarter revenues anyway are going to be record levels. They're going to exceed 2019 levels. And whether or not they're able to bring that completely down to the bottom line, I think will be dependent on where fuel costs wind up. Right now, we're right around 250, 280 a gallon, somewhere in there, depending on the day. So to the extent we're at the lower end of the range, we should also see pretty good second and third quarter earnings.
Okay. That is something I hadn't really anticipated. There's so many things you can think about with the airlines. The most important, probably demand, how many consumers are going to be out there traveling, how many business travelers, what they're willing to pay. You think about pilot shortages, you think about some of the issues with the FAA, but just the idea that it all comes down on the bottom line to fuel costs, that is something that is volatile and it's out of their control.
Exactly. Well said, Becky. I couldn't have put it better myself. I think you're absolutely right. All those issues, though, lead to too few seats. We just heard the replay of what Scott said the other day about demand being very strong and supply not being there. We were not back to 2019 levels in general. In terms of capacity, and we're not going to get back there. Scott talked about other airlines retiring wide-body aircraft. You mentioned the air traffic control situation. The FAA asked the airlines, or working with the airlines, to reduce capacity out of the New York area by 10%. So think about what that does to the number of seats, reduces that. But on the other hand, people want to fly. So the airlines have only one choice to discourage some demand, and that's to raise ticket prices. So we are looking at,
we have
I
no
think,
choice
very
but
strong.
to raise prices.
Exactly. Exactly. We have to raise prices, and that will lead to a really strong revenue growth, as well as the ancillary revenues, of course, help as well. But we worry about margins for all the reasons, Becky, that you cited. And then the thing people don't realize about airlines is demand is always good until it's bad. And you don't really see it coming that much because and Scott mentioned this the other day also to Phil, and that was that they saw a big decline in business travel right around the Silicon Valley Bank issues, but then it rebounded. But we're still not, in general, back to where we were in 2019. If we were, the system would be even more taxed than it is.
So it sounds like it's going to be a miserable summer to be a traveler on the airlines. But given all those factors, what would you say for airline investors? I see you've got mostly market performs or outperforms on these stock ratings.
Yeah. So you're going to have to bring your patients to the airport, book early, and take the early flights, because then you don't generally run into the pop-up thunderstorms that cause later in the afternoon delays. And then in terms of stocks, so United, actually, UAL happens to be our best idea for 2023 because of their international footprint and the fact that international travel is rebounding the way domestic travel did a year or so ago. Remember, a year ago, a lot of countries still weren't fully opened. You had to test to come back to the U.S. and people forget that. And they also forget that most people book their summer vacations between mid-March and mid-May. So by the time the government lifted testing in mid-June, nobody is, air quotes around that, but people really weren't going to Europe. They were staying domestic. And now they are. They're going to Europe. They're going to Asia Pacific, not Southeast Asia, not so much. China, Japan is finally open. So you're going to see all that strong traffic this summer and in the third quarter. And then we'll think about the fourth quarter later in the year. But United, because of that international footprint, they're going to serve more than 110 destinations this summer internationally. So that would be our number one pick, followed by Delta with its relatively strong balance sheet and free cash flow. And then Copa, which we don't talk a lot about. It's a mid-cap company based in Panama, really well situated we call the hub of the Americas. So CPA has a 2.5% dividend yield. We like that. It's one of the few airlines that's paying a dividend, and that's pretty significant.
Helane, thank you. Helane Becker.
Thanks, Becky.